Hello, 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 everyone. Lana Williams, financial coach based here in Atlanta, Georgia. Listen, I want to take a few minutes and talk to you about the softer side of money management. And this is something that I have seen in working with clients and over the years that I feel is omitted, right? A lot of people don't really think about and talk about. However, it is the core to learning to have a healthy relationship with your money. And that's the softer side of things, right? So we know that money management is not just income minus expenses. It's bigger than that. If it were not, then you wouldn't have such negative impact when you have financial stress. Having stress with your finances can impact your job, your relationships, right? Your confidence, right? So many areas of your life can be both negatively and positively impacted. And so let's talk about something that's called the 5 C's of credit. And I find that this is a really good example, right, of how those two worlds mesh, meaning the financial aspects and then the healthy part, right, the relationship with money part. So let's take a look at this really quick. Where are we? Okay. So think about when you want to apply for a loan, okay? You want to apply for a loan. What is it that the lender is looking for? So of course, the lender is going to look for, right? Can you afford the payment? That's what most people think. And do you have good credit? But it's more than that. It's deeper than that. Think about if your cousin Joe, right? Let's just say you had a cousin, Joe, and that cousin came to you and asked you to borrow money. What are some things that you would want to know before you lent Joe the money? Okay. And keep in mind, one of the key things is how much is Joe asking for? So if he's asking for $100, you may not have any questions, right? You may, hey, Joe, here you go. If he's asking for $5,000, right? You may have a few more questions. If he's asking for $25,000, right? Then you're going to have more questions. But what are some of the things that you would consider before you lent Joe the money? And let me give you an idea. So one thing is you would want to know, well, it looks like two things. Two things you would want to know is, all right, Joe, why do you need the money? Okay. What's it for? What have you been up to? Right? Why don't you have the money? What's going on? What's the situation? Okay. Why do you need this money? That's a natural, right? Natural question that you would have. Are you going to pay me back? Okay. So, they say don't mix money with family, friends, etc. That's a question, right? Is this going to be a gift, or should I expect to receive the money back? So are you going to pay me back? When are you going to pay me back? Right? So next paycheck, right? Next pay period, next week, or a year from now, what's going on? What is my expectation with this money? And can anyone vouch for you? Okay, so your cousin is asking you to borrow money. Well, he just borrowed money from Aunt Mary 2 months ago. Did he pay her back? Right? If I went to ask Aunt Mary, did Joe pay you back? Would she say, yes, he did, without a problem? All right. So these are some natural questions that you would have. And again, it could depend on the dollar amount. So think about that in terms of a lender, right? If you're trying to borrow $1,000, they might not have a lot of questions. Okay. If you're trying to borrow 300,000, then they're going to have a few questions. So how does this relate to you, right? How does this relate? And so let's take a look at that. One of the first things is capacity, okay? Can you afford this loan, okay? Can you afford it? Simple math. I make this amount. This is the amount that goes out every month. I have room to afford this payment, right? So what is your capacity? Can you afford the loan? Capital. How much money do you have? So if you're asking me for $300,000, right? Or if you are asking to borrow $300,000 to make a purchase, how much of your money are you putting towards that purchase? Are you asking me for all of it, right? So what is your, right? Your capital, how much do you have? Do you even save? Right? Do you have savings? Do you have assets? Because if you do, that makes you a stronger applicant. Okay. Collateral. Do you have something of value equal to the amount that you're asking me for? So the simple terms is if you are getting a car loan, okay, then the car is collateral. In other words, the bank is holding the title to the car. You don't actually own the car until you pay that loan off. And the reason they want collateral is because if you go into default, they can sell the car and get some of the money back. Rarely do banks recoup all of the money. We always say, you know, banks are not car salesmen. Okay, they're not realtors. They are lenders. They deal in money. So they actually don't want the car. They actually don't want your house, right? But they do want something of value. So think about that with Cousin Joe. If he's asking to borrow $25,000, hey, what can I hold? Okay, in case you don't come through. All right. Conditions, if I can speak. Conditions are what's been going on? What have you been up to? Remember that question? And so from a lender standpoint, that is stability. In other words, if Joe has not worked in 6 months or a year, or changes jobs every 3 months, or quits his job, right? Every time you turn around, he's quit his job. That's not going to make you feel real comfortable lending him money, right? Versus if he's been on his job for 3 years, okay? And the job before that, he was there for 5 years. You can see how that would make you feel a little more comfortable. And what about housing, right? What about his residence, right? Every time you see Joe, he's moved, he's living someplace else, right? He's staying on a friend's couch, okay? And then the last time you saw him, he was someplace else. Does that make you feel really comfortable lending him money versus, right? I just got a new place. I've been there for a year and a half. The place I had before, I was there 3 years. Okay, so what are the conditions? What's going on? And so you can see, right? You can see how those softer moves that we make in life really do impact our finances. Just think about that for a minute. And then lastly, character. Is he trustworthy? Does he do what he says he's going to do? Is he an honest person? And that's what credit really is all about, right? Credit is your report card. It's saying, I borrowed money from all of these people, and I do what I said I was going to do. In other words, I honored the contract. I borrowed $5,000. I paid them the $5,000 back. Okay. And I have a laundry list of people that I've done that. I have a track record. So in other words, I have character. I do what I say I'm going to do. So let's recap. I can afford it. Okay. Right. Which means I kind of manage my expenses. I manage my income and expenses. I have capital. Okay. I have assets. I have a savings account. I have a small 401k. Hopefully it becomes a big 401k, right? So I have some capital. I have some things going on, right? I have collateral. I have something of value. I'm not just asking you for all of it. That's where you get into down payments with buying homes. Okay. Yeah, I have something that I'm going to put towards it as well. I have some skin in the game. Okay. Conditions. I'm a stable person. Okay. That just lends to the trustworthiness. Okay. And then credit. I do what I say I'm going to do. So think about that. I wanted to take a minute and share that with you, the 5 C's of credit. All right. Bye-bye.